Okay, for accounting purposes, each partner in a partnership business will have their own current account. And a current account is probably easiest understood as an account that keeps track of how much the business now owes to the partners, or the partners owe to the business, depending on how much value the partners have added into the business and how much they've withdrawn as cash or assets in a previous year or current year. So as it's seen as a liability account for the business's point of view, something that's owed to somebody else, in this case a partner, the brought down is really supposed to be on the credit side. So the brought down is supposed to be on the other side to where it currently is. Now, you can have a brought down on the wrong side, on the debit side, if in previous years the partner has withdrawn, taken drawings out which equate to more than what they were due or what they've earned from salaries, interest on capital, or profits previously earned. And then this being a liability, the other entries would go in like this. So if we say if it's a liability, if that liability increases, the numbers would go on the credit side, and if the liability decreases, the numbers would go on the debit side, on the left side. So interest on capital is a reward to the owners for putting in capital, investing money. So that is something that is, any interest on that is a reward to the partners, and if partners are to be rewarded, then that increases what the business owes to them. So that increases the liability on the credit side, the right hand side, so we put interest on capital there. Salaries earned. Any salaries have earned that partners have come into the business over the weeks and months and worked is something that's owed to the partners, and therefore that increases the liability that the business has to the partners. Profits that have been earned is owed to the partners, so that increases the liability for the business to the partner. And in this case, on the left hand side, the debit side, interest on drawings is a charge or penalty for taking drawings or money out of the business early, because we want partners to leave money or capital in the business. So if they take that money out, they get charged interest on drawings. Now, if they get charged, they now owe that to the business. So that will reduce the liability of the business to those partners, because this is now the partners owing to the business, essentially. So then that reduces the liability, and that entry goes therefore on the left-hand side, the debit side. And any drawings where partners actually take cash or assets out for what they previously earned on this side, any drawings will reduce the liability that the business has to that partner, and therefore goes on the left side or the debit side. And that's the entries that we have, and then we come up with, we have to total the account. The larger side here is the left hand side. It comes at 156,000. We use that larger total. This side is the larger total. We use that 156,000 as the total on both sides. And then we need to now work out how much is the remaining balance on this account. We've got this much on the right hand side that's increased the liability. This side has decreased the liability. We need to figure out what that balancing figure now is. So if you take the 156,000, put it on both sides, clearly this side doesn't add up to 156 because it's the smaller side, and so there's a missing number here which we call the balance to carry down. And if we just do 156,000 and minus the numbers that are already here on the right hand side, then we'll find the missing number, and that is going to go here, and that is going to be 100,500. And that balance to carry down at the end of the year becomes the balance brought down, or the balance we're going to start with at the end of at the beginning of the next year. So that then becomes the balance brought down on the opposite side underneath the totals. So we have 100,500 is the balance we will start next year with at the start. And now remember, the totals represent the end of the year, so anything underneath or after that is the start of next year, and the balance carry down is something we do on the last day of the year above. Okay, so that's a current account, and if you want a fuller explanation, more detailed, with more numbers, just check out my Udemy course where I go through this in much more detail.